What's going on, everybody? Welcome back to yet another video. So in today's video, I'm going to be showing you a brand new day trading strategy with my man GD Investments. If you guys do want to see us start making more videos about this specific trading strategy in the future, what I need you to do is like the video and comment down below letting us know. But yeah, in this video, we're going to be showing you exactly what this day trading strategy is. So let's hop right into it. What's up, my man, Mr. GD? How you doing today?
Good, bro. How you doing?
I'm doing good, no complaints. So in today's video, we're going to be showing everybody a new day trading strategy that we've been kind of teasing for a little bit, combining both of our strategies to find really good entries. So we're going to start off and you're going to show how you found your zone today for support. I'm going to show how I found pretty much the same exact area, but like a specific price point to keep on watch, and hopefully people find value in this.
All right. So we're on the hourly chart on SPY. And one thing I like to notice is that this was an old zone, but I kept it on there and it kind of worked perfectly as a demand zone. It was previously supply. As we can see, we bounced off of it once and then we came back up and blew through that supply yesterday, making it demand today. So the zone did flip. However, if we can go on the 4-hour chart, let's see. It actually worked. This zone worked as demand before, then we broke that, turned to supply, we touched it here, reject it, then we blew through it again, so making that this zone a flip of zones and making it demand again. So that's kind of how we found that zone. And looking on, let's say the 15-minute, it worked almost perfect today, right? We opened up higher, we had some news, we had CPI, so it was a little choppy. We opened, we flushed down into this zone. We ended up bouncing off of this zone and continuing higher. So, yeah.
So, just to give people some education, why did you choose that exact area of support?
So when finding supply and demand zones, what you want to do is you want to go look at higher time frames because that gives you the best probability. So as we can see on my chart here, we had multiple touches of the same area and we come back around, we touch this area again. So how I would draw this is going on the 4-hour. It's maybe a little more hard because the candles are a little bigger. Let's go to the 1-hour. I can't really see that. So let's go back to the 4-hour. We'll draw it out there. Basically, I get my little rectangles. We had this base here. We touched this area a few times and we broke through. So what I would have done here was went from the low of this candle where the move actually happened, or this one right here, where the move actually happened. So I like to go from the previous one since we bounced off that area, and go to the candle wick low to the body high of that candle and basically draw it across, making it a zone. So that would be the zone I would draw. Then we look at that on the 15 and the 5-minute, and same thing, right? We come here, we reject it as supply, and then we ended up breaking through and using it as demand today, pushing forward. So that's kind of how I would find my zone.
Gotcha. And then as far as confirming the entry with your demand zone.
Okay, yeah. So this zone flipped from supply to demand. Now, how do we confirm an entry here? Well, we want to look at multiple time frames to really enter this trade. But if we're on the 5-minute, we enter this zone, we see a little candle of, we see, what is this candle called?
A doji?
Is that a doji candle? Okay, there we go. We see a doji candle form on the 5-minute and we end up pushing out. So what you could have done here is waited for the exit of this zone to take a trade to just make sure you have proper confirmation to the upside. However, once you see a doji candle form here, what you can do is say, all right, I'm going to play calls here. My stop loss will be underneath this low of this candle. So, ultimately, if this candle started bouncing and you entered your position here, your stop loss would be only about 30 to 50 cents down. So that's how you can really make your risk reward make sense there.
Cool. Pretty solid. So,
Yeah.
Yeah, now I'm gonna show you guys how I found the same exact level, except using a different strategy. Cool. So like I said, I'm gonna show you guys how I found the same exact level that GD had. I think yours was, where was it? Right here.
Yeah.
Is this where you drew it?
Yeah.
So here was your demand zone, which ended up lining up with the 50% fib at 392.26. So the way I'm going to figure out how to draw supply and demand, because honestly, like I said, I think there is a strategy here mixing together the fibs plus the supply and demand to where it gives you like more of an accurate entry. So again, this being at 392.26, we do have this demand zone right here, which is pretty much just a big area of support. We can take our fibs. So in this scenario, I ended up taking, let me make this brighter, ended up taking this low to this high right here. So this was the last pivot low that we had. And then as the market pushed up today, we set this high right here. So now if we go to a smaller time frame, you can see that the pre-market high was 398.78. So because we have this pivot low to pivot high, and then the market started pulling back, that's when we can actually draw this fib right here, pivot low to pivot high. Now, at this point, what we're looking for is going to be that pullback either to 392.26, and then I had a deeper pullback down at 390.72. So when I see the 50% fib, I just think of it being a little lower probability than a 61.8. But there was a $2 or like a $1.50 range in between the two. You could have tried either or. But in this scenario today, you can see that that 50% fib ended up lining up with that demand zone, which would have made it higher probability. I didn't know that GD's demand zone was right there. But so as the market opened, it immediately sold off. So we had this quick little pump on the 1 minute, and then it said nope, denied, and then instantly just sold all the way down into here. Now it got very, very close to this 50% fib. I personally did not take this trade. I really, really wish I did, because honestly, I thought they were going to drop it down to this fib right here. But what I'm going to start doing into the future, and I've told myself to start doing this multiple times, is as we start getting close to the fib, is to add maybe like a quarter of my position. And then when it touches it and I see the confirmation, that's when I'll add, the other, whether it be half or 3/4. So in this scenario, oh, what's up?
No, go ahead.
Yeah.
Sorry.
So in this scenario, just like you do it with your supply and demand, you add a piece, and then, once it confirms, you add the other piece. We could have started adding here as soon as it comes out of that demand zone. You could have added the other half. And from there, I mean, market literally went straight up back into the high of the day. So you were probably risking, if you were to get in at the dead bottom, 35, 40 cents, maybe 50 cents, depending on where you entered to the downside. So stop loss around like 392.10 or 392. But from there, I mean, it still went 392.50 to 397 pretty much. What is that? So $4.50.
I want to say something on this strategy. So you use the fibs and I use supply and demand, but typically if we can align them to, like, honestly, that gives you multiple confirmations. And even to say that your 50% retracement or fib level does not really touch it to a T, at least you have that demand zone to say, hey, we're in this demand anyways. I have my risk to reward still in my favor here. So let's give it a try. And my stop loss will be that fib, giving me about, 50 cent, 60 cent stop loss. I think that's a good way to look at it. And also, like, in this trade example, like, if you take the trade in the start of the demand zone, while you have your fib level underneath, at least you can put a starter position in and say, okay, I'm expecting price action to hit my 50% fib, and then if it doesn't, then whatever, then I can either scale in more as we exit the zone, or I can just use my small position and milk it for all I can get.
Right. Yeah. So, yeah, I mean, I really like this strategy. The only thing I need to do is figure out how to draw a supply and demand. And then other than that, I mean, we can start piecing it together, seeing how it works, doing some back testing. And hopefully, it's a profitable strategy in the long run. So we'll see.
So I think the next step from here is that we start to work together a little bit, like pre-market. We kind of get our zones and our fibs aligned.
So if you guys do want me and GD to make a video where we go over, I guess we'll back test or we'll like start doing it in real time, like tomorrow, You tell me where your supply and demand zones are. I'll look for fibs. I'll see if anything lines up. And if they line up and it ends up coming up to the area and we actually base a trade off of it, and it's either a winner or a loser, we'll just keep track of that. And then I guess sometime in the future, we'll come back to the results and see, yeah, it was a profitable strategy. We won 70, 80%, or no, this was trash. We only won 20% of the time. So,
Yeah.
but as far as what we've done the past videos and we've shown the examples, it looks super accurate. Now at this point, we just got to put it to the test.
Absolutely. I think we'll see really great results from this strategy for sure.
Let's do this. So, as always, if you guys did find value in this video, make sure to smash the like button. Make sure to subscribe to my channel. Thank you guys for 40K. But also make sure you guys go over and subscribe to GD's channel. He has tons of free education on there, a whole video on supply and demand. So if you guys have not watched that, definitely make sure you guys do. But also, as always, comment down below if you want more videos from me and GD in the future. Other than that, GD, do you have anything else that you would like to say?
No, that's really it, man. Thanks for having me on.
Of course. All right, everybody, take it easy. Have an amazing rest of your day, and we'll see you guys in a future video.